right now is another slowdown in price action a little bit. Not an extreme slowdown like we got there, in the middle of July. If you guys remember, July 3rd through July 22nd, we moved. What do we move? From the high of July 3rd to July 22nd, 18 days, we moved under 0.5%. In those 18 days or whatever. So definitely not quite that extreme, but just the last 3 days were basically neutral completely after a really big run. Now the weekly chart still looks nice. I'll actually pull that up here for you. Let me go ahead and let me share it so you guys can see what I'm saying visually. So this is the weekly chart on the spot here. And you can see the weekly chart still looks great. Still just grinding higher. We got out of this kind of 3-week box with that flush. I think Graham called this flush pretty nicely on opening Playbook that we had immediately. And I think both he and I would have thought we'll probably get a little follow through from that, maybe back to these highs or something. And instead, we just got a gap up Monday. And you can see if I zoom all the way up here, let me just zoom. What's crazy about this? Do you guys see the bottom of this candle? So the gap up Monday from 2 weeks ago never gave up a penny from that. Like we turned that weekend and we never even came near continuing anything that this pullback started, and we've been up since then. So on the weekly chart, we're still looking really good. You can see on the daily chart, like I just mentioned, just kind of kicking into neutral here. Just a little bit of slowdown as we get to the top. So I think we'll see once again the market maybe take a breather for a couple days as it has, and then we'll have to make a decision. Are we going to get a pullback, or are we going to continue this grind higher? And I'll let Graham speak to what he thinks for the second half of August, because I know we talked seasonally about the second half of August and September. Maybe that is a time that we get a little bit of a pullback. Before we do that, I wanted to mention, if we look at the sectors right now, we do have another flip in the sectors. We have XLV leading over the last 5 days. Tell me when you guys have seen XLV leading last. It's been a long time. So we see that, and I don't know if we're going to get legitimate follow through from that or not. But Graham had mentioned, and I kind of agreed, that we probably saw an overcorrection in the healthcare sector, even though I was really bearish on it during the beginning of the Trump administration, actually before the Trump administration. As soon as RFK made his way into the mix, I became very bearish. But at the end of the day, I would say that we've probably overcorrected relative to the actual health of those companies. I mean, Eli Lilly and NVO and some of the others that make up, they have taken a hit, but not nearly the hit represented on the charts. And by the way, if you look at Eli Lilly, I mean, this chart has never looked this bad, or at least not in recent history. I mean, this is, if you go all the way back here, this is July of 2024. So we've got a year of ugliness. Now, if you go to Eli Lilly and you pull up the weekly chart, I mean, this is the chart you're going to see, folks. So Eli Lilly's never really seen the level of pain that we're getting right now. But you can draw your little trend line and see, hey, maybe we're at the bottom of the channel here, somewhere in that range, and maybe we're going to fill this ugly gap here that we got in the earnings. Because what was it, downgrade? Like 14% on it.
Yeah.
So it looks like maybe we're going to work back toward filling this gap here. And then I actually think we could trade it to the top of the channel, and even more if it can just get a few positive tailwinds going its direction. Now, I'm hesitant on healthcare-related things, trading them toward all-time highs, thinking that they're going to be juggernauts that they have been in the past, because I think there are some other fundamental challenges. But again, if you look at the actual companies, they are definitely healthier than the chart represents. And then Graham mentioned NVO, which he thinks might NVO. I can't type while talking. NVO. There you go. Which he thinks might get a boost here too, and actually be the better risk reward in the short term. So, Graham, correct me if I'm wrong, but I think you said you like NVO maybe to have more potential here in the short term, but then you'd flip back to Eli Lilly for more potential in the long term.
Yeah, and excuse me. One of the reasons Eli Lilly was down so bad is because their new drug was anticipated to massively outperform Novo Nordisk. But the testing results didn't come in so good on it. And so that's why maybe short term we could see NVO gain back some market cap there.
Yeah. Yeah. Makes sense. And I know, I mean, I'm not super in the weeds on this, but I know the big thing that a lot of them are working on are the weight loss drugs that are going to be easier, that you can take, just with a pill and a cup of water versus the injections, and trying to get that to have the same level of effectiveness as the injection. Is that kind of the big next step?
Yeah. And so I'm messing around here with this StreamYard layout. I want to see if we can make our screen a little bigger.
Oh yeah, you can flip it around. You can put us on top, or you could just literally get rid of us and go there if you want.
Let me see if this does this look any bigger? Sorry, I gotta save his new layout. Oh, did it work? Oh wait, here. Does that help for the viewership?
You guys can tell us whether you like top side, full screen, get rid of our faces. We're going to try to optimize. Someone had said, hey, I can get a bigger screen on Zoom the other day, but actually this platform will definitely give you a bigger potential screen than Zoom, because you can go into that full screen button in the corner, and that's actually, will give you more screen size than Zoom ever will give you. So you just got to click on those bottom right arrows if you want to do that.
Here, let me ask you guys. This will be we'll get back to the markets here in a second. This is screen layout 1, we'll call it, and then I'm going to do screen layout 2. Give us your feedback if you like 1 or 2 better, just so we know. All right, this is screen layout 1. Here comes screen layout 2.
All right, and now we will anticipate your votes.
Same size, I guessed. Oh no, Bob says 3.
Bob says 3.
Hide speakers. Oh yeah, if we hide ourselves completely, here would be 3. But then you can't see me and Nate and I drinking our coffee this morning. What are you gonna do?
Yeah. How would you guys survive without that?
All right, let's roll with 3 for a little bit here. Then we can always flip it back.
All right. Well, there you go. That's classic vote between 1 and 2, and then go with 3. I love it. All right. Well, NVO, I also think, listen, I don't like taking beaten down stocks a whole lot, but sometimes it gets to the point where they're interesting. I was mentioning I have this snapback indicator that sometimes I use when I'm trying to get things that are way over sold or overbought. And you can see orange line means short, and then blue line means buy. This is not an indicator that I use by itself. It's actually this is like a $7 indicator I built as something that you can overlay on top of your chart, just in combination with other strategies. I would not take every signal on its own, but when something gets really beaten down and I'm looking to buy it, I like to use this. Or if there's a key support level on a weekly chart, I'll throw this over top and see okay, is there a snapback on top of a weekly support level? And I'll throw on this snapback indicator. And so you can see on NVO, hey, we're kind of in that oversold and snapping back territory. And the cool thing is, because it's so beaten down, if you wanted to trade it just to the $64 level, kind of the bottom base here, this has been a level of support you can see here in this range. Well, we're at $50. So you're talking about a 20% return on the underlying stock just to get to the baseline here. Obviously, if we're trading it to all-time highs, you'd be trading it, a couple 100% or so. So anyway, that's on NVO, and then Eli Lilly, I think, is also interesting because of that gap fill, and just that XLV is probably oversold. Now, the other sector that has been really gaining momentum and starting to outpace technology is XLC. So that's communications. Biggest holdings in communications are Meta, Google, T-Mobile. Graham, tell me if I'm missing any of the big ones that are in XLC.
AT&T, but
AT&T. And so that's interesting, because you would probably think XLK, which is down here, has still been grinding. NVIDIA didn't have the greatest week, but it held up. So here's NVIDIA. Okay. Held up. It's not like it's pulling aggressively back. Palantir ripped on earnings and then gave back a little bit, but still, we were up 160 to 177. So we're up 8% or 7.5% still since earnings on Palantir. AVGO has held up pretty decently, kind of like NVIDIA. So we're not giving a whole bunch back on technology, but yet XLC has started winning. And if you guys remember, it was 4 weeks ago that Graham and I said, hey, we still really like Meta. Meta's still our pick in the Mag 7. Uncle Roger was not pleased with our Meta pick, Graham. But we really liked Meta for a lot of reasons that we don't have to rehash, and we're starting to see that pick up. Now, Roger was right. It got oversold. It had a pullback. But what we were saying was, like, for the rest of the year, this is our top Mag 7 pick, and it's really been run. Now, the other one was Google. So I said Google sucks. Don't trade Google. Graham said Google's going to make a comeback. You should buy it. So I'll leave you guys to look at the chart and tell us who was right on that one. But
man, that one hurts.
Google's been a monster.
I've been in this massive dilemma here. Is everyone familiar? Like, if you're not in a tax protected account with the short-term capital gains versus long-term, basically, if you buy a stock and sell it back within 2 years, you pay short-term capital gains, which tends to be more expensive than long-term. And I've had my portfolio in, and it's been doing nicely, but I haven't held all these stocks for 2 years. So I said I wanted to buy Google, but then I was, in that catch-22 of what stock do I sell and pay taxes on to then go risk it on Google. So I never ended up buying it.
Oh, I thought you at least had some in there.
No,
because you said
I've got Google
would have been like
on,
here, like
I know
end of July that you were saying I think Google is going to run, and so you would be up. Let's see, about 20% on the stock since then.
It hurts.
But yeah, I mean, you're right. Google has been
1 year on short term. Okay, I may have been wrong. All I know is when I opened up with the position, it says short term, so I still was waiting. Like, come on, someone be long term. But yeah.
Yeah. I was very concerned about Google, but someone mentioned it has been on kind of a top pick on the income machine very consistently. So for my lack of trust doesn't mean that it hasn't technically hit all the filters and been a really strong stock. And now if you scroll back, I mean, we're getting right there. Here it is. Boom. We're getting right there, folks, to his all-time highs. Now, I'm a believer in I don't mind trading stocks at all-time highs. Stocks that break all-time highs tend to do pretty well. So a lot of people look at Google and say, wow, it's way overextended. Yeah, probably true. Probably is overextended. But at the same time, if you just trade stocks that do break to all-time highs, they tend to do pretty well. So Google's one that, overextended, sure, driving XLC, but I still think it's in great shape. We mentioned AT&T. AT&T really looking good now. Started this run really at the end of 2023 and has been a pretty monster pick since. I think someone could correct me if I'm wrong. I haven't traded AT&T actively. I think they ended up dropping their dividend down a good bit and focusing on growth somewhere along in that time frame. If I recall correctly, someone again can correct me in the chat, but I think they were up in the 8% dividend range and dropped it down a decent bit and started focusing more on growth and reinvesting. And obviously that has definitely paid off on the stock itself because they've gone from about $12 to 28, so over 100% return in the last 18 months. And then one that we really liked last year was T-Mobile, and it did take a massive rep, again, over 100% ROI there. From the beginning of 2024, a little bit of a pullback now, and now we're getting this break. So I actually really like T-Mobile. Once again, just, I'm not like, this is not how I trade. Hey, just draw a trend line and then trade. But from a very basic technical standpoint, I think T-Mobile looks quite good. As a matter of fact, let's do a trade on T-Mobile. This is one that I think has a chance to get back up to all-time highs. And it's a pretty easy setup for like a jump trade type of setup. So let's do a trade on T-Mobile today. If you guys want to take a little bit more, this is like what you would call a longer term jump trade, kind of like a dream portfolio trade, if you will. Let me pull this guy up. All right. You should see my screen now, and you should see the hood chart up right now. Which, by the way, hood looking good. We need hood to, let's see, right now it's saying that my limit is at 113.50 to get filled. But the cool thing about this is that as time goes on, this limit will actually come down to me, because now we're on the other side of time decay where it's on our behalf. Anyone in the hood trade with us? Give me a yes in the chat if you also have a hood trade open right now. Nice.
Oh, yeah.
A lot of action. Okay, cool. Oh, wow. Ton of you guys are in hood. Beautiful. So how many of you, so when I say, let me ask a follow-up question here. When I say hood is now on the other side of time decay and this target is going to come toward me, all things being equal, does everyone know what that means? When I say that? Okay, we got a couple no's. Okay, cool. Well, let's use this as a training exercise then, and I will. Oh wow, just filled. Well, there you go. So I went for 74 cents, got filled. Okay, let me explain this to you guys, because I think this is another just kind of good teaching moment for everyone who's not familiar with how we trade. And by the way, great job. What did I get filled? 46 cents. So I got like an 8% ROI there.
I think mine is 44, I believe. I can go back and look.
Okay. So boom. Okay. The way that we traded hood was we put a debit spread on. Graham, can you remind me what our strikes are so I don't have to look back?
111, 112.
Okay. So what we did is we put an order here at 111. This was our buy call. And then we put an order here at 112, and that was our sell call. We were in right around like the end of the day. So just below this price, we were entering like somewhere in here. Now what happens is when hood is moving in our favor, we're gaining value on the trade, just like any call option, right? When it's moving aggressively in your favor, you're of course gaining value in the trade. And what I had a limit up here for 74 cents. Now the potential of the trade is to be worth $1. So I went for 74 cents. I went for a portion of it. And what Thinkorswim did is it gave me an estimate that you'll get filled somewhere around up here early on the trade. But the really cool thing about the way that we trade is that as hood got above this level, time decay flips over and is working on our behalf. The reason that is because if hood finishes anywhere above this red line, it's going to be worth $1. Okay, we traded at 111.
Hey, are you drawing?
Oh shoot! I just realized you're not going to be able to see it on my screen. Oh, on my
beautiful drawings. I see a little pin thing, but I don't see anything coming through.
Oh dang! I just realized because I'm here. Let me see. I think I could do it if I share my full screen still. All right, let me try. You guys know I can't survive without my beautiful drawings. All right, hold on. Let's see if I can do it. If I do the entire screen here. Add that. Oh, there we go. Look. That's you guys see how much you guys missed? All of my drawing. Everyone missed. All right. So the idea here is that if hood finishes above 112, this becomes worth $1. Why? Because we traded a 111, 112, $1 wide spread, and anything above this line of sand at 112 becomes worth $1. So when we were down here, we hadn't yet crossed that threshold. Time is not in our favor. But when we do cross above this threshold, now the market is not just giving us the value of the direction, it's also giving us the value that time is running out on the trade as we're above this level. So right here, it was worth 74 cents. Why? Simple math. The market is giving us probabilities. Hey, it's up above this line in the sand. It has the potential to be worth $1, but you still have, 6 hours where it could go down. If you fast forward till 3 p.m. and it was here, it's going to be worth like 95 cents. Even though it's in the exact same place, exact same price, because there's less time now for it to go against us, and the market knows how to price that in. the same trade that was worth 74 cents at 112.99 is now going to be worth 95 cents or 97 cents. So from here, what I was saying is time is now to our advantage. The stock doing nothing will benefit us because time is now working for us instead of against us. So does that make sense to everyone? How time flips once you get above this line in the sand and starts being your friend versus fighting that time decay. Now it's adding value to your trade, all things being equal as it stands there. And so that was really the cool thing that, if you get up early in the morning on the right side of that line in the sand, it works really nicely for you.
Nate, if you don't mind, I'm going to steal the screen and walk them through that again. Just another way to visually see. It was part of the 60-minute income masterclass part 2.
Oh, nice. I love it. Okay.
I hope it seemed to resonate well too. So I'm interested to get your take as well. All right, let me go entire screen.
Graham's going to outdo my my ugly Picasso pencil with like a real presentation.
All right, the vortex has started. All right, can everyone see my screen now?
Yep.
All right. So these are my own drawings here, just kind of like what you did. It's not the actual options curve, but you can get those. Robinhood does a decent one. There's some others that you can do it. But basically, when we're using the 0 DTE here, in this case, it was 1 DTE because we traded hood at the close yesterday with today's expiration, which hopefully, Nate, we can keep doing that on Thursdays during the closing playbook because it's that one unique day we can do pretty much any large cap stock overnight.
Yeah, we should ask the folks, maybe even get a poll going and get some stock, like what stocks they want to look at, that kind of thing. Because what we were thinking about, guys, since me and Graham really like those 1 DTE overnight trades, but on regular stocks, you can only do that on Thursday because Friday's expiration. So you can only trade Apple, Amazon, whatever you want to trade as a 1 DTE overnighter on Thursday. So we were thinking maybe Thursdays would just be like, we put on a whole bunch of trades, 5, 6, 7 overnight trades on different stocks, different directions. And just have Thursday be like a rapid fire overnight trading session on stocks. If you guys think that would be cool.
Yeah. So if you're looking at an options, so imagine up here in this zone right here, it's red, but this is where you need it for it to pay. So this was based on a 50% target. If you did an overnight trade or even 0 DT trade, you set a 50% target. You can see time is, lateral here and price is vertical. So if you buy a call here, basic call 0 DTE, you needed to get here by this time to hit 50%. As time goes on and time decay works against you, you now needed to get higher to hit 50%. Mm-hmm. When you get towards the end of the day, you need it really high to hit 50%. That's because when you're buying, DTE is days till expiration on the options. So if you're buying short-term options, if it happens fast, you can hit. As time goes, it gets harder and harder and harder. Now, the cool thing is, again, as time decay works against you, it demands a bigger move. But by using the spreads we use, this is based on a 50% target, we get to flip that curve. So here's the curve that most people see by trading basic calls to the upside. This is our curve with time decay now working for us on debit spreads. We flip that curve, whereas time goes on, it demands less and less of a move. So as time passes, that option that we sold, so in this case on Robinhood, the 112 strike is what we sold, that starts decaying in value, and we need smaller moves to hit. So we'll look here again. Here was a trade we took on July 21st. You can see it made an extreme move in the morning. So it made that big move higher. We hit early. What about July 3rd? Here's one, for example, where it did make a decent move in the morning. Basic calls probably wouldn't have hit. But because we have time decay now on our side, we flipped that decay curve. As time goes on, we hit there around 11. So again, this is the 60-minute masterclass. I'm not going to take you guys through the whole thing, but I just want to show you this is the basic principle of why we trade the way we trade. Because yes, we want to hit right out of the gate for sure, but we know that not all stocks move crazy fast in the morning, right away. So we want to be on this side of the curve where as time goes on, our odds increase. So hopefully that's a cool little visual to show you guys basically what we're doing here with the way we trade debit spreads. We're flipping that curve so that decay works for us.
Yeah, that's cool. That actually makes a ton of sense. And I think for people who, are used to trading calls, maybe they've experienced that, even if they don't know kind of technically or visually what's going on, where you're kind of chasing it. It looks good for a while. And then, you realize later in the day it's bleeding, even though it went somewhat in your direction. Well, it's just all that time decay and direction, that combination that's happening that you're fighting against. And so if you're trading short-term options, like Graham just showed there, regular calls and puts can get you like a really big jump start. So if you bought hood this morning as it dipped below with a 0 DTE call, and got that 3% move, yeah, you'd be up like 200% or 300%. But if you want to consistently be able to make the market easier for you to win and hit targets, I would certainly recommend going the other direction. All right, let me get in our T-Mobile trade. Kind of cracking above here. This is just kind of a classic, just making the round, looking like it wants to go back to all-time highs. Communications have been strong. They're not the strongest sector right now seasonally, but we're going to take a trade a little bit further out, so not especially worried about that. Good job by all you guys who hit those hood targets. Always nice to come to Closing Playbook and make a little money, pay for your time with me and Graham. So on T-Mobile, I'll take a look here and see what we have in the actual options chain. Like I said, I want to go out. Basically, if you guys look at a weekly chart here, you can see it's probably going to take, even if we do get some follow through here, we get, maybe 4, 5, 6 weeks it would take to get up into this range. So I want to give it that time plus some extra time on T-Mobile to actually make this move. So probably going to look at 8 to 10 weeks out. You can see here, that's probably going to be the October 17. So this is the one that I'm going to look at. What's that? That's like 9 weeks out, kind of in that threshold. So it's going to give T-Mobile 9 weeks to get up here near these highs. Now, I won't trade right at the high number, that 276. I'll go a couple strikes below that level. So let's take a look. Oh, we only have $5 strikes on T-Mobile. I was thinking we'd have 250s. All right. So actually, we have $10 strikes on T-Mobile. Wow. All right. That's a little annoying because I really wanted to zero in maybe on this 270, 250 or 275, but we're going to have to trade the 270, unfortunately, because all we have are these $10 strikes. Let me just make sure for any random reason November doesn't give us better strikes, but no, the out of the monies are all still $10. Okay. So what that means, folks, is we will trade the 260, 270 on T-Mobile. Good news is it makes it even easier for us to hit. That's now $6, like 3% below the 2.5% below the all-time high. So it's a little bit easier, but it's a little more expensive trade. As you can see, it's going to cost us about $2.80. And what we're doing, we're basically giving T-Mobile 9 weeks. So same thing I just described to you with that line in the sand, right? We have a line in the sand where it has to get above it to start really paying us. And we're going to give it about 9 weeks to do that. So let me go ahead. I'll type that one in the chat for you guys. This is T-Mobile, TMUS. We are buying the October 17 260 call. We are selling the October 17 270 call. So that line in the sand is going to be 270. So we need to be above at expiration. The debit here is going to be $2.84, which means that our profit potential on this one is going to be over 200%. As a matter of fact, let me just pull it up for you guys. I'm on my other browser, so I don't have the calculator up. Okay, hold on. I gotta go to the members area. Let's just do it so everyone can see visually. Sometimes I move really fast, do mental math, tell you guys what you're looking at. But I think it's better if we do it one step at a time, just from a learning standpoint, so you guys can see it. So let me actually do that. And you guys should now see the one-click members area. This is for opening Playbook, which, Graham, we still need to change this to like Playbook VIP and not opening Playbook VIP. And then we have this guy here, which is our kind of our target assistant, where we can put in the numbers and just make sure our math is right. So if you look at the trade that I just posted, or I'm about to post, what we're buying is the 260 call. What we're selling is the 270 call. And what we're paying is $2.84. So what that's going to tell us is the max spread value, what it could be worth is, oops, I put a penny in there. The max spread value is going to be 5,000. That's what the total value can be. But we're paying a portion of that. We're paying $14.20 if we did 5 contracts. So the potential profit is $35.80. Now, if you just did 1 contract, your max value is going to be $1,000 because it's a $10 wide spread. What you paid versus your risk is $284 versus $716. And so then we determine, okay, how much do we want to get out? So what I want to do is I want to do 150% target. That's what I want to try to make on this trade. And this tells me right away, with 150% target, my limit price needs to be 710. So GTC limit of 710. And there, folks, is your T-Mobile trade. If you want to do it the way that I'm doing it, it would be the 260, 270 call, paying 284 with a good till cancel limit. That means it's going to sit there for the next 9 weeks in your brokerage account. And if T-Mobile crosses over and hits that $7.10 value on that spread, your broker is going to cash you out of the trade, and you're going to get a win, whether or not it finishes above 270 at the price of expiration. Now, like I said, if you want to see what the max value is, well, it's up here. Okay, so what we're going to take is $426 per contract, but it could be worth $716. So that tells you kind of what you're giving up to put that target on. You could go a little more aggressive, by the way, and go for the 200% target, and then your limit would be $8.52. So if you want to go for a 200%, $8.52. If you want to do the 150%, like I did, $7.10. And that is our T-Mobile trade for the day.
Awesome. Well, we do have Blaine joining us today. Blaine, I'm going to bring you in here from the Chuck Hughes team, and kind of what we talked about there with the debit spreads working for us as time goes on. That decay is now our friend. Blaine and Chuck and the team have been using a similar approach in the stock market each and every day. So, Blaine, can you walk us through what you're doing? We're going to do a full little quick training here on you guys, so please take notes. We're going to fly through some options, some strikes, and everything. This is a new concept for the opening playbook. This is not something we have covered before. So, Blaine, I'm going to throw you to the wolves here and wish you the best.
well, appreciate it, Graham. Well, Graham, Nate, thank you so much, first off, just for having me in this morning. Appreciate the invite. Really excited to be here. And, yeah, I have a great lesson on deck for butterfly spreads for the strategy here, so I can hop into that in a second. But, Graham, I was going to say, nice shirt, man. I think we're wearing the same shirt today. So.
That's hilarious. Yeah, we timed that up perfectly.
Yeah. Well, let me go ahead. I'm going to go ahead and take over the screen share here. And let me see.
And Blaine, too, was a former Division I football player. So if you guys ever want him or me to beat up Nate, just let us know.
Man, many moons ago, that was, galaxy far, far away when that happened. But
I think you're undervaluing, Graham, that I was a Division I billiard player. So I've got my own.
You probably were.
To contend with, okay?
There we go. Graham, Nate, can you guys see my screen okay?
Yep, looks good, man.
Fantastic. Awesome. Well, folks, I'm really excited to be here. Going to talk to you a little bit about a really exciting project that myself and Chuck and our team have been working on over the past year, really developing this new project. It's a new trading strategy. We really have never had something like this before ourselves. So it was really exciting to kind of learn this and figure out this new strategy. But it's something we've been calling the Everyday Income Alerts Project. And if you've never seen me before, never met me, my name is Blaine Markham. I'm the Chief Trading Strategist over here at the Optioneering team. And I'm here today, of course, to talk about our brand new Everyday Income Alerts project. Now, you're probably wondering what is this Everyday Income Alerts project? And don't worry, folks, I'm going to tell you all about it while I'm here today. That's what I'm here for. But first, I want to tell you a little backstory, which actually led to us discovering this powerful new strategy I'm here to talk about today. So as you're likely aware, there have been some major strides made in AI technology over the past couple of years. And with these radical advancements that have been made with AI in recent years, everyone's bandwidth for performing intense research has vastly expanded almost overnight.
It's amazing now.
It really is. It's unbelievable what you can do. And, having some of these tools, Graham, I've watched some of you guys opening and closing playbooks recently. I know that you're using them too, but having some of these tools on your side, in your pocket, it really is like having a full-time dedicated research assistant working for us.